We are doing journal entries and their solutions. We completed 3 problems. Now we are going to do fourth one. So as usual, accounts are three types: personal account, real account, nominal account. Very important rules are personal account, debit the receiver, credit the giver. Real account, what comes in debit, what goes out credit. And nominal account, all expenses and losses. Debit, all incomes and gains credit. So using these types of accounts as well as rules of accounts, we are preparing journal entries in the books of a party, trader, okay, whatever. Okay, so the process of accounts starts from the event that we are treating as transactions. Accountant will take a decision on this. So that is he analyzes the transaction, identify the type of account. There are 3 types of accounts. He will identify the transaction. In that, what are the types of accounts involved? Based on that, he will apply the rule. And later the recording, analyzing, recording, summarizing, and preparation of the financial statements. Okay, here rules are there. You can see the rules. Debit the receiver, credit the giver is the personal account rule. Diagrammatic presentation of types of accounts. 3 types: personal, real, nominal accounts. Personal accounts related to persons or individuals. Those are called as natural persons, artificial persons, and representative persons. Real accounts related to property, possession, or liability. Those are recording for the tangible real accounts and intangible real accounts. Nominal accounts especially used to record incomes, gains, losses, and expenses. Rules of debit and credit for the personal accounts are: we have to debit if the person is receiver. We have to credit if the person is a giver to the organization. And we have to debit the asset when it is coming into the business. We have to credit the asset account if the asset is going out from the business. If the organization spend for expenses and any loss is incurred, we have to debit, and we have to credit if the organization earned income or gain. Table representation: personal account, debit the receiver, credit the giver. Real account, what comes in debit, what goes out credit. Nominal account, expenses and losses debit, incomes and gains credit. You can already note down. You please refer this slide once again. Okay, the format of journal entry will be like this: date, we have to write date, and we have to write accounts affected. 2 accounts, at least 2 accounts should be there, because we are following double entry system. For double entry, 1 debit and 1 credit must be there. So here the point is which account to be debited, which account to be credited depend upon the accounting rules. Three accounts having three different rules, and based on the type of the account, rule will be changed. Okay, accounts debited, affected, narration is there, that is explanation of transaction, and debit amount, credit amount we have to record in the respective columns. This is LF, ledger folio number. It is reference number to the ledger posting. Okay, there are three steps are there. We already did in two problems, 13, 14, 15, 16 also we did, and 17 also we are doing, and we are separating journal entry with the analysis. So first we have to identify the transaction and identify the types of the accounts involved. First accounts, later types of the accounts, later we have to apply the rule. If such account is personal, then we have to apply the rule. Okay. So now we are doing problem number 17. 17th problem. And 17, this problem I will explain in MS Excel. Okay, please be ready with your notebook, pen, and follow me how I am writing, analyzing, listen the audio and watch the video. Try to understand. Okay, students, we are going to try to subscribe to get the updates. So transaction 1 is Vishwanath commenced business with a capital of 30,000. First we have to write problem number 17. Journal entries in the books of Vishwanath. Right. So transaction 1. First, Vishwanath started business means she brought cash and his capital. Cash is real type account. Capital is personal account. Vishwanath capital personal. So cash is coming into business. I have to apply the rule. What comes in? That should be debited. Vishwanath is giver. Giver should be credited. Giver should be credited. So the date is 2016 March 1. Then debit account is cash. Account data to Vishwanath capital or capital I can write. Amount is 30,000. Credit amount is 30,000. That's all. Okay, that is the entry. So only this part we will write in our notebook. That is a reference purpose. You please write only this part in your notebook. This is for reference purpose. Later we won't write this and directly we will write in our notebook. Right. Next one is bought machinery 5,000. On March 2nd, transaction 2. What we purchased machinery. When we purchased machinery, we have to give cash or not. Machinery is asset na, so real account. Then cash also real account. So when I purchase machinery, real account rule is real account rule. What comes in debit, what goes out credit. Real account rule is what comes in debit, what goes out credit. Okay. So according to that, machinery is coming in, what comes in, right? Paste that. Excellent. Try, will try. Just a moment, okay? Just for understanding purpose, we are making these arrangements. Right. So the rule for personal account, real account are personal account, real account, what comes in debit, what goes out credit. So machinery is real account. Real account rules is what comes in, what goes out. When I purchase machinery, machinery is coming in. That's why I have to apply what comes in. Then when I purchase machinery, I have to pay cash. So cash is real account. What goes out should be credit. Then the date is next month onwards. Simply I have to write date 02. Debit account is machinery. Machinery account data to machinery is 5,000. Debit. Credit amount dash. Debit amount dash. Credit amount is 5,000. Okay. Bought machinery. Bought goods for cash. Same rule. What we purchased. Right. Third one. Bought goods. Goods purchase. Bought goods means purchased. Purchases. Purchases. And the one is cash. Goods are real account. Cash always real account. When I purchased goods, goods are coming in. That's why I have to apply what comes in will be debit. So what comes in debit, cash is going out. What goes out, credit. Then the entry will be what to be debited, purchase account data to cash account. Here Mohanlal is there. Mohanlal name will not be recorded because we are purchasing the goods for cash. Machinery account, sorry, purchases account data to cash account. Purchase account data to cash account. Amount is 2,500. Okay. Sold goods for cash to Giri. Here we have to record cash, not Giri. Only if the cash is not given, it is treated as a credit transaction. We have to record on his name. Okay. So here the entry will be for sales. Sales means goods real account is cash real account. Goods are going out. What goes out will be credit. What goes out is credit. And what comes in cash is coming in when I cash coming in debit. So here cash account data date is 4th, I think. Yes, 3rd only. Cash account data to sales account. Cash account data to sales account. And the amount is 4,000. We'll try to write the narration. Goods sold on credit for cash. The narration should be in bottom line. We'll try that one. Okay. Next one is purchased goods from Jai Simha. So we are not finding cash in that. It is which transaction? Credit transaction. So we have to write purchase account data to JSimha account. Number 5, purchases. Here we have to write JSimha, and JSimha is personal account. When goods were purchased, JSimha is a giver. The giver is credit. So goods are real account. Real account rules are what comes in debit, what goes out credit. Goods are coming in. The rule is what comes in debit. So now the entry will be purchase account data. What account to be credited? JSIM account. Amount is 3,000. Narration will be goods purchased on credit. Next, cash sales. There is no difference between the entry bought goods for cash from Madan Lal and cash sales, because in both the transactions cash is involved. Same entry, account data to cash account data to sales account. Same rule. So when we are analyzing sales, another one is at entry date. Entry is sixth date. This is sixth transaction. Cash sales, real account. Goods are coming in, going out, credit, and we are getting cash. Cash is real account. What comes in debit? Cash is debited and sales are credited because they are going out. Narration is what goes out credit. Received interest from Mukul. Hello? Entry is received interest 7. Received interest means we are receiving cash and we have to record in the name of interest. Okay? So cash is real account. Interest is a nominal account. Okay? All incomes and gains. When I am receiving interest, interest is gain. Interest is a gain or income. I can treat as it is income. So all incomes are nominal account. Cash is coming in. The rule I have to apply what comes in debit. According to this, all incomes to be credited. Credit all incomes. Now the entry will be, date will be, here it is 6th. Date is 10th. Cash account data. To interest account. Amount is 2,000. Here we were not recorded Mukund because we have to record income. That's why interest to be recorded. That's why we were not taken to Mukund account. Deposited cash into bank. Very clear. Cash is there, bank is there. Cash. Real account. Cash, when I deposited, cash is going out. What goes out? Credit. Another one is bank, also real account. Bank is getting the cash. So in the bank, cash is coming in. What comes in? Debit. So I have to record the transaction. Debit is bank, bank account data to cash account. Cash account amount is 6,000. Debit 6,000, credit 6,000. And the narration will be cash deposited into bank. Okay, full-fledged entry is like this. Right. Next transaction, purchased paid cash to Jaisimha 2,900 in full settlement of his account. Where is Jaisimha? We purchased goods from Jaisimha 3,000. Out of 3,000, we paid only 2,900. 100 we got benefit, that is gain. Okay, gains to be credited. It's to be credited. So in this transaction, there are three accounts are there. What are they? Three accounts are there. What are they? Cash is there, JSMI is there, as well as a discount is there. Number one, transaction, cash, it is real account. And when I pay to JSMI, cash is going out. What goes out should be credit. Next, JSMI. JSMI is personal account. And is receiver. The receiver. He received cash. Receiver will be debited. Next one is discount received. Is gain. Okay, nominal account. In this transaction, all three personal, real, nominal accounts are affected. Okay, so all gains credit. Two credits, one debit. And the date will be date is 14th. Debit account is Jay Simha. How much amount we have to give to Jay Simha? 3,000. Out of that, how much we are paying cash to cash? 2,900. How much is gain we are getting? 100 rupees as a discount received. 100. See, students, 3,000 credit total is equal to debit total of 3,000. That is magic of double entry system. Whenever you total debit items, it is equal to credit items. Okay. Right. Narration will be Jay Simha account settled. With discount. With the discount. Sold goods to Venkat. So what we sold goods. Goods are going out or coming in. Goods are going out or coming in. Going out. So what goes out should be credit. What to be credited? To sales to be credited. To sales account credited. Amount is amount 4,000 I think. Yes, 4,000. So to whom we sold goods? Venkat. Venkat is which type of account? Personal account. Venkat is receiver or giver? Receiver. Receiver will be debited. So in debit I have to write Venkat. Venkat account data amount is 4,000. Simply we can write narration. Goods sold to Venkat. Okay. Next entry is Venkat settled his account by check and deposited with the bank. So Venkat amount is 4,000. He gave a check of 3980 and that check was deposited directly into bank. That's why we can write directly bank. Bank. We received check from Venkat. Bank account data. And from Venkat is a giver. Giver should be credited to Venkat account. Venkat amount is 4,000. Check amount is 3980 I think. 3980. 220 rupees is a discount. Hello. Which is loss. All losses should be debited. Check this. 4,000 is equal to 4,000. Okay. Right. Narration will be Venkat account settled. Last simple rent paid by check. Rent is expense. All expenses are debit. So rent should be debited. Rent account data to check na. So that's why bank account. Rent amount is 5. Very simple. Subject to we have to understand the rules. Rent paid by. Okay. Very simple. So again, you please watch this video. In between, you will find some unrelated words.